Good evening. Before I start speaking, I just request to Bombay Chamber and your organization, for any future event, if I am participating, please cut out the honorable. I think it's enough if you just refer as Governor Reserve Bank of India. I think that will sound far better. And Sri Ritesh Tiwari, President Bombay Chamber, Ms. Pinky Mehta, President Designate, past presidents and members of the chamber, members from the media, distinguished guests, ladies and gentlemen. Good evening. I'm extremely delighted to be here to participate in your annual general meeting. In fact, I had been wanting to come for a pretty long time, but somehow it had not worked out, and I'm extremely delighted to be here to share some of my thoughts with all of you about I think you have chosen a theme of Brikshit Bharat. I will broadly talk about, in those lines. And so what I have done is that briefly after the introductory part, I just want to talk on two broad aspects. One is about the India's growth story, how we have traversed in the recent years and the way forward. And the other aspect I would be talking about is the Reserve Bank's role in this context, in what the Reserve Bank can do to facilitate and support India's growth story. It has been mentioned, by the President, Mr. Tiwari, that this chamber was established in 1836. So I was actually going through the papers which you had sent, and it's, it's very, I think, a lot of momentous decisions in our country. You referred to the Postal Act, you referred to the Weights and Measures Act. But I find from the list that, which was sent to me, I found that, for example, I think you set up a machinery for arbitration way back in the 1880s, then presentation of accounts in the printed form. And these are not small achievements, considering that it was done in 1860-61, and also having your accounts audited by a professional auditor. And also what is of immense importance is that you have played an important role in the formation of the ASSOCHAM. I think you are one of the founding members of ASSOCHAM. And finally, and very interestingly, I think your chamber initiated by now the well-known Kala Ghoda festival in Mumbai. So congratulations for you for all these achievements. I was listening to Sri Tiwari with great interest about his tenure as president over the last 1 year. My congratulations to you and to all the other members of the chamber who supported you in your initiative. I was also extremely delighted to hear the thought process and the outlook which the incoming President, Ms. Pinky Mehta, has also presented today. And I'm sure you have a year ahead of you full of several activities. It has been for the chamber a phenomenal journey, and all my best wishes to the chamber to even achieve greater heights in the months and years to come. Now, a word about the Reserve Bank before I move to the topic. The Reserve Bank, what distinguishes the Reserve Bank from other central banks? many other central banks. I would not say Reserve Bank is unique in a way, but it is unique with a few other banks which can be put in that category. The Reserve Bank is a full service central bank. The range of responsibilities of the Reserve Bank are much wider than most of the other central banks. There are many central banks which are only out and out monetary authorities. There are other central banks which are monetary authorities plus the banking sector regulator, but they don't have the power to supervise the banking sector or the financial sector. The Reserve Bank is the regulator. Reserve Bank is the monetary authority of the country. The Reserve Bank is the regulator and supervisor for the financial sector, consisting of the banks and the non-bank finance companies and a host of other financial sector or subsectors, like call it the ARCs, call it the the other kinds of entities that we have in the financial sector, the asset reconstruction companies or the microfinance institutions or the digital lenders. The Reserve Bank is also the regulator for the payment systems in the country, and the overall financial stability of the country is the responsibility of the Reserve Bank. Although it has not been explicitly defined in the Reserve Bank of India Act, but if you read the preamble of the Reserve Bank of India Act, it comes out very clearly that Reserve Bank as an institution is responsible for the monetary and financial stability of the country. And the reason why Reserve Bank has been entrusted with these multiple roles is that there is a lot of complementarity between each of these roles. And if you have one of these roles without a few other roles, then that complementarity gets lost and the effectiveness of Reserve Bank also would get lost. For example, Reserve Bank is the banking sector regulator. It's also the banking sector supervisor. The regulatory function of Reserve Bank expects us to form regulations for the banking sector. The supervisory functions of the Reserve Bank entrusts upon it the responsibility to supervise the working of the financial sector entities, namely the banks and the NBFCs. In the supervision side, if we find any deficiencies or if you find something is happening in that side, immediately the regulatory side can take care of that. So there is a lot of interconnectedness between regulation and supervision, and the power to resolve. So in the event of let us say a crisis or a severe stress in a banking institution, as it happened in the recent years in a couple of banks, the Reserve Bank is entrusted with the responsibility of finding resolutions or finding solutions for that stressed bank. Under a particular provision of the Reserve Bank of India Act, the Reserve Bank can restructure, amalgamate compulsorily or with willing participants. The Reserve Bank can find a resolution process for a bank under stress. And the powers vested with the Reserve Bank under the Act are very comprehensive. Of course, for this kind of a resolution, we do need the approval of the central government, but it's the Reserve Bank which prepares a scheme for amalgamation or a scheme for resolution or a scheme for revival, whatever you call it. So therefore, the Reserve Bank is very much intricately associated with the growth responsibilities which is vested in various authorities in the country. Now, talking about India's growth story, I would like to say that India is at the threshold of a major structural shift in its growth trajectory. I repeat this sentence again because I have constructed this sentence very thoughtfully, very carefully, and I mean each and every word of it. I repeat, India is at the threshold of a major structural shift in its growth trajectory, moving towards 8% GDP growth in a sustained manner. We are moving towards annual growth rate of 8%. If you look at the average growth that India recorded over the last 3 years, the average comes to 8.3%. And the current year, we have, from the Reserve Bank side, we have given a projection of 7.2% growth for the current year. The Indian economy in the last financial year 23-24 contributed to 18.5% of global growth. That is 18.5% of global growth was driven by India's growth. It's no mean achievement. It was much lower 7 or 8 years ago. And I think the IMF projects this growth rate to go up. And you are aware that it's the fifth largest economy, poised to become the third largest economy. And all that is already in the public domain. Now, the main drivers for this kind of growth in the last 3 years, particularly when I talked about this average growth of 8.3%, and in the current year, the main drivers are now, why I am saying there is a structural shift is that there have been multiple drivers of this growth that we have achieved and the growth expectation that I am placing before you. It's driven by the various structural reforms which have been undertaken and several other policy initiatives that have been undertaken in the country. Among the structural reforms, at the forefront, I would like to mention the goods and services tax, the GST, about which a mention was made. Now, the advantages of GST was known all along. It will avoid tax on tax, the cascading effect. All of you are associated with various types of business. You understand taxation. You understand how business operates far better than somebody like I would do. So therefore, the GST had certain advantages of avoiding multiplicity of taxes or tax on tax on the various transactions, the various purchase and sales transactions. GST, I think, has been one of independent India's biggest structural reform since 1947. When GST was introduced in 2017, it was expected that once the system stabilizes, and I'm happy to mention and happy to see that in India, the GST has stabilized much faster than many other countries. You have countries which introduced GST but withdrew it within a couple of years. You had countries which took almost 8 to 10 years for the GST to settle down. But in India now, GST has settled down, and that is reflected in the fact that the tax collections on the, in the goods and services tax, there was a time 3 years ago when 1 lakh crore collection per month became a big story. Then it reached 1,20,000 crores. Then it became, I'm talking about per month. Then it reached, so today per month, the collections have already touched, I think in a particular month, it touched 1.7 lakh crore or so. And it is in the range of 1.5 lakh crores to 1.7 lakh crores. Now that is the successful, that is the success of GST. Business has become much more convenient, and business, the costing of, the pricing and the costing of business has become much more efficient and competitive. Together with that, I would like to classify in that category the introduction of the Insolvency and Bankruptcy Code. And I would also like to classify with that the flexible inflation targeting that was put in place in 2016. I was fortunate, and I consider myself really fortunate. I happened to be in the finance ministry during that period, and I was very closely associated with the initiatives of the goods and services, introduction of the GST, the enactment of the IBC, the Insolvency and Bankruptcy Code, and the introduction of the flexible, inflation targeting framework by way of an amendment to the Reserve Bank of India Act. Flexible inflation targeting framework is very important because a stable inflation is at the core of long-term sustainable growth. So I leave it at that. I'm not going into further details on that. Now, when for the current year, we gave a growth projection of 7.2%, there were comments, and I think for some people, and I don't find fault with them. Everybody has his own analytical methods. Everybody has his own way of analyzing things. I'm not finding fault with anyone, but it's my duty to place on record and to place before you that we are confident about the 7.2% growth for the current year. Of course, in any projection, in any forecast, there would be always risks to the upside and risks to the downside. The downside risks are obviously weather-related events, geopolitical conflicts, frequent geopolitical conflicts, fragmentation in global trade, fragmentation in capital flows. Then you have other challenges like the possibility of heightened financial sector volatility. So therefore, there are lots of downside risks. At the same time, there are also upside risks. What is for real today is that global growth is improving, but at a slower pace. But nonetheless, there is growth. The IMF has projected global growth to increase by 3.2% in the current year and also 3.2% in the next financial year. Of course, this is lower than the historical average, the trend of global growth, or the historical average of global growth over between the period 2000 to 2019, when it was about 3.9% or so. But nonetheless, with 3%, 3.2% global growth, if there are upsides to growth in the larger economies, and if there are less of geopolitical tensions, so there are lots of upside risks and downside risks to any forecast. But after weighing all these upside and downside risks, we are pretty confident at the moment about achieving 7.2% growth. And I say it on the basis of a few reasons, on the basis of few factors. One is that currently we witness the growth momentum is very strong. This is something which is missed out by many people. In the last financial year, the fourth quarter growth momentum, that is month on month, from month to month, in the last quarter of the last financial year, that is from January to March this year, the growth momentum was very strong. And in the first quarter of this financial year, that is from April till now, almost we are at the end of June, the momentum continues to be strong. And there is absolutely no reason, I find no reason why the momentum should slow down. In fact, our analysis shows that the momentum could even be higher. And the monthly bulletin, our researchers have, every month they come out with a monthly bulletin. In fact, the nowcasting team projects a slightly higher growth for the first quarter compared to our projection, that is the Monetary Policy Committee and the Reserve Bank's projection of 7.3% in the first quarter. The nowcasting team projects it at a slightly higher, about I think 7.4 or something like that. But anyway, without getting bogged down in too much in numbers, what I'm saying is that the growth momentum continues to be strong. Again, rural consumption, which was lagging behind for a long time, has picked up. The sales of FMCG goods in the FMCG sales volumes have increased in the rural sector. The monsoon is looking good. NREGA demand is less, which means that there is more work available in the rural sector. The monsoon is good. I mean to say that the forecast of the monsoon is good. There is a bit of a lull in the last couple of weeks or so, but the IMD expects the monsoon to pick up. The external demand is also picking up. All international agencies, whether it is the IMF or the WTO or the OECD, all international agencies expect global trade volumes to be higher in the current year than last year. Last year, global trade volume grew. According to one projection, there was a slight decline, but according to most projections, the growth was only marginal. This year, all the international agencies expect global growth the growth in world trade volume to be 2.7 to 3% in that range. Now, a 2.7 or 3% increase in global trade volumes is a huge growth, because we are talking about the entire global trade. So that should create additional, that should create better external demand for our goods and service, for our manufacturing as well as for our services sector. Talking about services, the services sector is doing extremely well. Our services exports remain very strong. They were very strong last year. The momentum continues even this year. On the supply side, manufacturing has also improved, as reflected in the various, IIP numbers or the PMI numbers, the flash figures also have come out 2 days ago. The flash figures of Purchasing Manager Index, they also are marginally higher than the previous month. And the private sector capex is now picking up. There is clear evidence of private sector capex now picking up. Government capital expenditure has sustained the growth story over the last 3 years in the post-COVID period. Now the private sector investment is picking up in specific sectors, for example, in cement, steel, all the sectors, most of the sectors associated with infrastructure are seeing that growth. Now, to sum up what India has been experiencing and what India needs in the future is a growth that is driven by multiple sectors. India's growth story has been and will be a multi-sectoral growth, and our approach to growth in India has to be a multi-sectoral approach. A country of 140 crores, a country which is now the fifth largest economy, aspiring to become the third largest economy, a country which has aspirations of becoming an advanced economy when we reach 100 years since our independence. A large country like this cannot depend on a single sector, whether manufacturing or services or export-led growth or whatever. It has to be a multiple sector driven growth story for India. Domestic demand, domestic manufacturing has been our mainstay. Services sector has been picking up in the recent years, and in agriculture sector its share has been coming down, but agriculture sector, the lot of achievements have been done, but I think there is still a lot of work to be done in the agricultural sector, especially with regard to improvement of the supply chains and the value chain framework. But I think our overall the agriculture in India has become in the recent years much more climate resilient than what it was, let's say, about 10 or 20 years ago. So therefore, India, there is often I hear discussion whether India should be a service-led, service sector growth or manufacturing sector growth. Now, I'm not joining issue with all that debate which goes on. What I'm saying is a large economy like India, the growth story has to be sustained by multiple sectors. Now, in this kind of scenario, what is the Reserve Bank's role and the role the Reserve Bank, being the central bank, is expected to play, and what role the Reserve Bank has been playing. Now, as you know, and it was mentioned, thank you for mentioning it, I think the Reserve Bank has enabled the country's financial sector. We have facilitated the country's financial sector to navigate through the multiple crises which we saw in the last 4 years, starting with COVID, the commencement of the Ukraine war, the financial sector volatility, the oil prices, the crude oil and the commodity prices, volatility, ups and downs, and the synchronized monetary policy tightening by the central banks across the world. So the international economic, the global economy has gone through multiple crises over the last few years. And at one time, when the onset of COVID came, when COVID started, or when the Ukraine war started, the outlook appeared that, it was feared that we will come out of this, every economy, not just India, every economy will be severely hit by all these crises. Yes, economies were affected. There were disruptions. We cannot say that no economy in the world can claim that they were completely immune. But what is unique and what is important in the case of India is that India's economy and India's financial sector have come out much stronger than they were before we enter the period of COVID, or before we entered these 4 years of a crisis for one after the other. In fact, there was overlapping of this crisis also. In this environment, this was possible because of several authorities are involved. No individual authority can take full credit for it. In any case, we are not in the game of trying to take credit. It's our responsibility and we have to do it. So, but Reserve Bank has tried its best, and I think our policies did work. And it has therefore, we now see an Indian economy which is in a much better position. The GDP growth is far stronger. the stability matrix of Indian financial sector is also far better than what it was earlier. Now, with aspirations to position the Reserve Bank as a central bank as a model central bank for the global south, which we have spelled out as a part of our agenda for RBI at 100, that is when RBI reaches its centenary year. So that is our aspiration for the Reserve Bank as a central bank. It should become a model for the central banks of the global south. Now, in the context of supporting the growth story, the central bank has multiple roles. The central bank's primary role is to provide a stable financial ecosystem which would support growth. A stable financial system is required in the interest of sustainable growth. If you are interested in short-termism, if you are interested in short-term growth, the story would be different. But every country naturally would like to have a growth which sustains itself, not only in the medium term, but also in the long run. Now, for that aspiration, and which is the aspiration of every country in the world, the stability of the overall financial system is very important. And that includes, first and foremost, price stability. It includes financial stability, that is the banking and the other sector stability. It includes external sector stability. It includes also the stability of the payment systems. Broadly, 5 things I have put. In the interest of time, I will confine myself just to these 5 points. Now, price stability is, in other words, that is maintaining inflation at the targeted level. Our target, as you know, is 4%. Now, why this 4% inflation target is important? Because research and detailed study has shown that at 4% interest rate, our economy will be far better placed. Our financial system will be far better placed. Our growth drivers will be able to sustain themselves. And above all, a high inflation would mean lowering the purchasing power of the people, especially of the poor people. When the country grows, naturally, every section of the society, every section has to grow, irrespective of whether they are rich or poor. So inflation in that sense, if it is maintained at the targeted level, ensures the stability of your growth trajectory. I hope I am not becoming too technical or anything, and I am able, so if you get bored, you please tell me. I will immediately cut short, and maybe we can have some interaction. And so I'll try and lighten the mood by providing one or two sort of anecdotes here and there. I think Nilesh knows about it, so I'll try and sort of bring in some. Anyway, so I'll leave it for a little later stage. So therefore, inflation is, is at the maintaining the, ensuring price stability, that is inflation at the target level, is very, very essential. And we in India, thanks to the measures which have been taken by the Reserve Bank over the last, 2 years, more than 2 years, that is with the commencement of the war in Ukraine, when our inflation touched 7.8% in April of 2022. Now the latest number we have is for May this year, when it has come down to 4.7%. So that means inflation has come down by about 3.1%, by 310 basis points. It has come down uh, primarily due to the monetary policy action taken by the Reserve Bank, and of course, the number of supply side measures which the government has initiated. So a mix of both the factors have played their role. Inflation is moderating, but moderating at a slow pace. We are still at 4.7 in striking distance of 5%. One severe weather event, vegetable prices may go up and we will be at 5%. So we have to navigate our path towards the 4% inflation target with a clear and unambiguous focus and commitment to bring down the inflation to 4%. There cannot be any wavering at There cannot be any distractions at this stage, because if any distraction will severely compromise growth. As in the game of chess, in any other game, if you make one mistake, perhaps, I'm qualifying it, some cricketer may question me. Uh, you play one shot very badly, but you can play the next shot very well. One shot you were about to be caught, but you were not caught. The next shot you can go for a six. We saw it yesterday in the cricket. It did happen. It can happen in many games, but there is one game where if you make one wrong move, you are finished. That is the game of chess. The game of chess, if you make one wrong move, you can lose the game. Like that, the battle against inflation, when you are dealing with the challenge of inflation, one single, that is a single wrong move, can just distract you, can throw you off track. And coming back to the track will be far more costly and will take much more time. So therefore, as in the game of chess, we cannot afford to make any mistake, we cannot to make any policy error, or we cannot afford to make any wrong move. We have to play our game. We have to decide our monetary policy actions primarily driven by the inflation numbers that we have and the outlook that we have, because monetary policy is always forward looking. Now, normally, if growth is well sustained, if you have good growth, then it is a clear sign that your monetary policy, your interest rates are not acting as an impediment to growth. In the last quarter, the GDP recorded a 7.8% growth. In the first quarter of this financial year, we expect 7.3% growth. So growth is well sustained, and the outlook for the current year looks very optimistic, and we are very sanguine about the fact that India will record 7.2% growth in the current year. So with a good growth outlook gives us the necessary space to completely unambiguously not single-mindedly, but unambiguously focus on inflation. So therefore, that is our target. Now, I have often heard in the some debate about other factors that concerns that growth is slowing down. I can say with confidence that the momentum of growth month on month, please look at the numbers, they are not slowing down at all, they are holding on, and therefore there is no worry on that side. There has been some debate, various other debates about whether the real rate is high and all that. Now, you see, I'm not again going into that debate. The point is, growth is well sustained. Outlook is for 7.2% growth. Inflation is at 4.7%, with lot of downside risks, with upside risks in the sense that if we have a very good monsoon and if certain things play out, then we can even have a faster, we can attain the target much faster. But at the moment, considering the mix of factors, I do not draw comfort that inflation is going to reach 4% just tomorrow or day after. It will take a few more months. I see some optimism in the next year, in the next financial year. And this I'm saying on the basis, I'm not saying anything new. This is very well explained in the monetary policy report of the Reserve Bank, which comes out every 6 months. And so therefore, at the moment, growth is well sustained. Inflation is moderating, but we still have a distance to cover. So therefore, we have to be very patient, we have to be very careful, and we have to sort of navigate in a very careful manner, not committing any mistakes. We are sanguine about our growth. We are also sanguine about our disinflation process of achieving 4% target down the road. We have given our projections, but still at the end of the current year, our average inflation in the last quarter, that is January to March, is likely to be in the order of about 4.6%. Again, in the striking distance of 5%. One single weather event of severe nature, we will be touching 5%. So therefore, we are completely focused on, as a central bank, we focus on price stability, We focus on controlling inflation because it is in the interest of long-term growth. The second point is the second aspect is maintaining financial stability. The stability of the banking sector, the stability of the NBFC sector, and the overall, overall stability of the financial system. Today, the banks and the NBFCs are perhaps the health of the banks and NBFCs are perhaps at their best in a long time. The non-performing assets, the gross non-performing assets ratio has come down. They're at about 3% or a little less than, sorry, banks it is less than 3%. NBFCs are around that. The capital adequacy, whether profitability, from all parameters, the banking sector and the NBFC sector continues to be very healthy. The external sector in India is also very stable. By external sector, yesterday we released the current account deficit numbers for India, and the current account deficit for the financial year 23-24 is 0.7%. Gone are the days when current account deficit was almost close to double digits. Last year, our current account deficit, last year meaning 22-23, it was about 2.1%, if I remember correctly. 2.1%, it has come down to 0.7%. Of course, I mean, in an academic discussion, somebody can argue that a current account surplus may not necessarily be, good, because a current account, if you should not, I mean, having a current account deficit, let me put it this way, having a current account deficit is not all that bad, because you are taking capital from outside. Whereas the current account surplus means you are exporting capital outside and you are not able to absorb it within country. So a moderate level of current account deficit always would be better. And that is because it doesn't mean, it doesn't reflect, it doesn't show that it's a situation where you're not exporting capital, but you are getting capital from outside. So the financial sector remains stable. The external sector, with a current account deficit of 0.7%, is very stable. The outlook for the current year is also one of stability. The foreign exchange reserves have now crossed 650 billion US dollars. And there was a time when, during the taper tantrum of 2013, there was severe stress felt by India, when there was a lot of outflow of dollars, and there was severe stress on our financial sector. But today, I think all the investors into India have full confidence that with such huge reserves, India will be able to meet its external sector obligations. So no wonder that after the advanced country central banks, that is the US or the Euro, the ECB, or the other advanced country central banks, when they increase their interest rates, in a normal situation, earlier there would have been greater flight of capital. Yes, there was some amount of flight of capital, but we were in a much better position than earlier, because our forex reserves were very high. And it is a matter of I have stated it time and again, it's a stated policy of the Reserve Bank that we would like to build up adequate reserves. We are at, I think the last print was about 653 billion US dollars or so. So it is $650 billion plus. And that, I think, gives a lot of stability to our system. And finally, the stable payment system, much has been spoken about, is UPI. CBDC is again a game changer. I think the future of money is CBDC. And I think on that CBDC also we have done a lot of work. Now I will not go into detail part of it. Why CBDC is important is that it's not in competition with UPI. CBDC and UPI will coexist. In fact, we have made both UPI and CBDC, which is now, of course, in a trial mode. The central bank digital currency is on a trial mode now. We are running a pilot project. We have made it interoperable because the same QR code, you can make UPI payments, you can make CBDC payments, you can use a sort of CBDC to transfer money into somebody's account through his UPI. I mean, it's all interoperable in multiplicity of ways. And we have started introducing new features into CBDC, that is having programmability. That means you can program, when you give CBDC. Let's say if government is giving scholarships to students, it can be given in CBDC, and it can be only programmed in a manner that it can be used if that is the policy, to pay fees in a college, or if you are giving some subsidy, for a particular, let's say if you give fertilizer subsidy in CBDCs, you can program it in a manner that the CBDC can be encashed only in a recognized fertilizer depot. So CBDC has got a lot of other applications. It can facilitate smart contracts in the payment system also. So overall, therefore, as a central bank, we have issued our agenda for RBI at 100. We as a central bank remain fully committed to supporting India's growth story. And in modern times, today, technology has become very important. We are also at the forefront of adoption of technology, adoption of innovation. So therefore, Reserve Bank has been and will remain fully committed to all its mandates, whether it is price stability, financial stability, external sector stability, payment system stability. Reserve Bank remains fully committed to all the responsibilities that are assigned upon it, that are assigned to it, and the Reserve Bank remains committed to supporting the India's growth story. With this, I will stop here. Thank you very much for your patient hearing.